Welcome back, everybody. Sive Morten is here with the ForexPeaceArmy.com. Let's have a look once again on the euro currency. So we considered two moments. First, the brief announcement of our weekly report that we have considered and have prepared today. And second is, as usual, we're trying to create the trading plan for a coming week, in particular, at least for the first couple of sessions the next week. So first is currently the situation on the market is a bit changed because with the lack of the new statistics from the United States, we haven't got payrolls, any news and updates on major data. Investors start watching on other markets, in particular on euro currency, what's going on in France, what's in the policy there stands, what's going on in Germany, and so on. And that start changing the mind. So if you take a look at briefly even on the posts that you could see in the X network, you could see that investors start raising the questions concerning the sudden and unexpected dollar strength. And it's already time has come for reversal because balance is changing in favor of the United States dollar. The Europe is just stuck in its own political and social problems, while the recent situation in the States with the recent data it's becoming stronger and slow down the possible pace of the Fed policy, dovish Fed policy, and blah blah blah, and so on. So how this concern and these new ideas is really reliable? So whether it stands really so or it's some overreaction, over dramatizing of this process. So that's what we have considered in today's weekly report. If you take a look at the long-term chart of the dollar, you'll see that the dollar is not cheap at all. So it stands approximately on the levels equals to 2003, where actually the statistics of the United States government and its debt position was absolutely different compared to what we see currently. And in the current circumstance, you can't call the dollar as a cheap. At the same time, as we already talked about this, and it's not surprising, based on the long-term charts, on the monthly chart, it's not unexpected reaction because euro has hit on the monthly the major OP at the conference resistance. And even in September, we talked about the possible pullback. So I'll just recall this chart that we talked about. From that standpoint of view, it's absolutely normal reaction. You can see it's very small. If even euro will drop down to the 110, it will not be the tragedy. It will not be the breaking of the major upside tendency. It just will be the proper reaction on the Gartner's 222 on the monthly chart, 30% retracement. So let's not over dramatize the current situation. And we think that it's not yet the subject to suggest of the breaking of the major tendency. We consider it just the pullback. That's what we really have. Also, we have considered a few factors, major driving factors, such as coming from the Japan, because investors start paying lots of attention to the Japan, what's going on to the Europe, but also we remind you what's going on in the United States, and we have put some background on our position, what we think, what we expect, and actually how we should deal with the current circumstances. So that's what we covered in the weekly report. Now let's go to the plan. Nominally, we have the bearish trend as on the weekly chart as on the daily. Currently, market stands in the conference support area, and actually the pullback that we see was expected. We talked about this on a Friday morning when the market has completed this support and touched the support and completed intraday standing target. So be prepared for a pullback. In fact, we have in place Gartner's 222 buy, and even 30% retracement here is the minimum target that market usually trying to reach when it forms 222 patterns. So I think that we could use this issue as the starting point for our plan, suggesting that here might be the pullback somewhere to the 30% of the whole downward action. That will be the starting point. And then we will see what will happen next. On the 4-hour time frame chart, let's consider the levels. So you can see market right now stands around 1630 first fib resistance, but the target of the 222 is around 1685. Here we see that it's also confidence resistance area. Well, very good point to start, right? So if we consider taking the short position, confidence resistance, it's not a bad point to consider. Of course, we will not take position blindly. First, we will see how market will reach it. We will see on the hourly chart what reaction stands to this level, and then we will make the decision whether to take position here or not. So that's what we intend to do here on the 4 time frame chart. But we start our trading plan right on Monday with the idea that for taking a short position, we first will be waiting for this level. That's the point for those who would like to take short position. Now let's go down further. On the hourly chart, we see a chance that we could get nice reverse hand short pattern. In particular, this pattern could lead us precisely to the 1680 in the way of some kind of the ABCD pattern. This could lead market to this confidence area. But at the same time, I know that a lot of you are trading on lower time frames. So if scalp trader, you could try to ride on these hand shorts as well. That's not a problem. So from that standpoint, you could get a few trades. First one, if you're trading on a really small time frame, such as the 5-minute chart, you could consider some taking short position around the neckline. If you will see here some bearish reversal patterns on the 5-minute chart, this first trade that you could do with the possible downward action to the 116, that's probably will be the target. But for the majority of our farmers trading on the hourly chart, you could consider probably some scalp long trade also from around 116 on the bottom of the right arm, where it could be some kind of the ABCD reaction. That's the pattern that also might be considering here. So that's in two words. On the scalp long trade, you could try to follow this hand and shortest pattern. For those of you who would like to take the short position, probably we are waiting for 1680, 1685 and watching what will happen there. Why I'm really careful to talk about the 1685 and I do not call you to take a short position immediately once market will reach it. I am a bit worried on this gap, guys. So it still exists, and if market will be around 1685, it will be not too far to close this gap. Usually Forex market very rare leaves unfilled gaps. So that's why I'm a bit gentle on the suggestion on the position taken right around 1685. This is great level, but let's just keep it in mind and see what will happen there. So that's probably all for me. Let's keep watching what will happen on Monday and Tuesday, and return back to this subject on the next update.